Hello, I'm Steven, the calculator guy, and today we're going to talk about options. But before we talk about options, we have to address the Grim Finance hack. Unfortunately, Grim Finance has been hacked. Most of the TVL has stayed there, which this is a good sign, but I do recommend taking your investments out of Grim Finance, especially if there's no withdrawal fee, especially if you didn't pay a large deposit fee. If there's virtually no risk, take your liquidity out. Maybe put it on Reaper, for the time being. And wait until everything dies down. I also believe that any Grim Finance forks will also experience a similar exploit, because if it's an issue with Grim, it's probably an issue with any of their forks. Now, Grim is a fork of Beefy, and Beefy has not experienced this exploit, so I do think it's Grim specific, so do be aware of that. It's a huge bummer, because I like Grim, I like all these yield aggregators, Beefy, Grim, Yield Wolf, Reaper, Apollo, etc., etc. It goes on and on. Spectrum. So I like these protocols, but Grim did get hacked. They're looking into it. They paused all deposits. Yeah, it's a bummer. It's not a good look for Phantom. Hopefully not too much was swiped, and yeah, whatever tokens were swiped are going to be dumped. That's just the way these hacks work. So hopefully they weren't like small cap proprietary tokens, because it's going to wreck the prices. And hopefully it wasn't too much. But, that remains to be seen. I, however, want to talk about options today. Do not want to talk about the Grim Finance hack, but I did feel like, we should at least mention it. Okay. So if you go on to DeFi Llama, which, we all love, you can click on options. They actually have their own sort of page here. You can see what the top protocols for options are. Now, oh my gosh, Open just overtook Ribbon again. Okay, so these two are competing for dominance. In my opinion, I think Lyra should be in the #1 spot, and I'm going to sort of talk about why in a while here. But I love Lyra. Open, I think, could be amazing, but just not on. They need to go cross-chain, or suffer the wrath of Ethereum. And then Ribbon Finance. We'll talk Ribbon. I like Ribbon because they have really, really good ETH yield strategies, but I'm going to be fully honest, I don't fully understand how you can participate in the calls and puts. So we're going to focus on Open and Lyra and maybe DopeX, and then I'll show you what I understand about Ribbon. So I apologize in advance for having a not super robust understanding of Ribbon. I'm actually trying to work with other people to get a better understanding, so then maybe in the future I'll do a Ribbon specific video, because they did overtake Open, and now they're back to #2, and sort of they're sort of fighting for dominance there. So clearly it's an important protocol. Okay, we're gonna go kind of quickly through Open because I really want to get to Lyra, and as you can see, I'm excited about Lyra. Maybe this will jinx me, and Lyra will end up crashing down terribly, but I think you'll understand why I'm excited about Lyra once you see the issues with Open. And when I say issues, I don't mean there's anything inherently wrong or bad about Open, or it's unsafe. What I mean is, if you look at the bids and the asks, right, already you're probably seeing a problem. There's a massive difference between the bids and the asks. And so, who is going to... Okay, so let's first talk about what options are. Options are bets on the bullishness or the bearishness of a particular asset in the market, right? So you're either sort of longing or shorting an asset. Here we have wrapped Ethereum. So my personal thing that I like to do is I like to sell covered calls or cash secured puts. It's one of the safer things you can do in options trading. People like to buy and sell these puts, which makes more sense than the American markets, but a European option, you have to wait until expiration. You can't sort of trade these on volatility. But I digress. Let's just talk the basics. So here we have calls, right? And if you want to sell a covered call, which means you have the Ethereum to sell, and you want to make money on selling someone the right to purchase your Ethereum. So let me say that again. With a covered call, someone will pay you for the right to buy your Ethereum at a higher price than it is now. Yes, you heard that right. With a covered call, you put up your underlying asset for collateral, and you sell someone the right to purchase that asset at a higher price at a future date. Now, if that underlying asset goes above that future price, we call it the strike price, then they get to buy it at the price that you committed to. So if the price of Ethereum goes to $6,000 by December 31st, you still have to sell it at $5,000. But hey, you got $30 for that contract, so you had some premium to play with in the meantime. So basically, like, you could get $30 per wrapped Ethereum to sell these covered calls, even though people are presumably paying $900 for these in premium. I don't buy that for a second. And if it stays under $5,000, you keep your wrapped Ethereum and you keep your premium, your $30. If it goes above $5,000, well, you sell your Ethereum at $5,000. Hopefully you're cool with that, and you kept your premium of $30. So the way you would do that, and you can do puts as well. So a cash secured put is where you put down the collateral. So in this case, you might put down 1,280, and you would get paid $16 to sell someone the right to sell you cheap Ethereum, to sell you Ethereum at 1,280 in the event that Ethereum goes at or below that strike price. Strike price 1,280. So two scenarios, right? December 31st rolls around, price of Ethereum's at $3,000. Of course, it didn't go down 1,280. You keep all of your money, you keep the 1,280, and you kept the premium, the $16. Woo! Now you're definitely not making that up in gas fees, right? $16, that's not going to cover your gas fees. So this strategy doesn't really work because of the Ethereum chain, which sucks, because this could be such a cool thing. And you can also, you could buy these things if you wanted to, blah, blah. And if you want to buy calls here, you can put limit orders, and maybe they'll get filled. They'll probably get filled. But there's not much volume on trading here. I don't know how this is the top protocol. I really don't. Maybe there's money hidden away here. There's always money in the banana stand. I don't know. But if you look at so if you were to sell a covered call, you would see that call here, and I believe you can close it sort of at will, which is pretty neat. Okay, but we're just gonna move on to Lyra because at this point in time, I'm more interested in Lyra. That's all I'm saying. Open may have a lot of hidden gems that I don't understand. But right now, I think the gas is prohibitive, and the bid and ask difference is so much that they need to work on themselves. So Lyra has launched recently and fixes the issues that I saw with Open. So one, it uses Optimism instead of Ethereum. So Optimism Ethereum is an EVM, so low gas for the transactions. Now you do have to bridge things onto Optimism, and if there's a lot of interest in Lyra, I will do a total walkthrough tutorial of how to do this, because I'm actually interested in entering positions on a few of these options. So I wouldn't mind going through that, but we're already at 8 minutes here. I don't want to take up all the time just doing an Optimism and Lyra video. So basically, you can see, right? So let's say I want to sell some calls. The premiums are reasonable. Actually, the premiums are pretty high. And you can see the strike prices. So let's just look at a few of these, right? So if I was cool with selling my Ethereum at $4,200, then I could sell this call, right? You're selling this call. You're getting $190 effectively in premium. And if the price of Ethereum goes to or above $4,200, you will sell your Ethereum at that price, but you've also kept that premium. If it stays below that and you're bearish in the market, so that's sort of what you were betting on, then you keep your Ethereum and you get that premium. This is pretty good, right? So 187 divided by 4,200. 187 divided by 4,200. I want to see what percent that is. It's a 4.5% return, which is pretty good, because that's not December 31st. What is that, 2 weeks away from now? 1, 2, yeah, almost exactly 2 weeks away from now. So 2% return per week. That's incredible. That's 100% AP. It's more than 100% APR on this, and you could turn this into APY by using the premium to buy more Ethereum. So 100% on Ethereum. That's really good. And so this is sort of the cool, fun stuff you can do with options. You're not going to limit your yield because you're not printing money out of nowhere. People are buying and selling these contracts, and that's where this yield is coming from. That's why where all this premium is coming from. So it's not like a farm. And I like farming, don't get me wrong, but if we're looking at DeFi long term and saying that eventually the incentives are going to lessen, maybe even dry up eventually, then we're going to see a lot of farms sort of hit a rough place. But if options trading could effectively come to DeFi, and I think it should, right? Some people have told me, hey, DeFi is not about trading. DeFi is not about, like, that doesn't want to be the stock. No. What DeFi wants to do is take everything that CeFi and TradFi has and decentralize it. So there's options, right? There's spread trading. There's all these crazy strategies in TradFi and CeFi. Yeah, I want those in DeFi. I want everything that they have, but I want it decentralized. And I want anyone to have access to it at any point in time with ease and with complete transparency of blockchains. That's what I want. So anyways, like, I think these are great. And if you look at the buy versus sell, right, the bid and ask price, they're pretty close, and that's what you want to see, right? This is a good sign. That means these markets are pretty tight. That means people are buying and selling and sort of closing those gaps between these two things. This means that they're a little bit more liquid. I like this. Puts, right? So you can sell someone the right to purchase your Ethereum. Or sorry, no, you can sell someone the right to sell you their Ethereum at a lower price. So let's say this 3,300. Gas prices are negligible in Optimism, so you could say, yeah, I'm willing to buy Ethereum at $3,300 in 2 weeks. Pay me $60 and I will commit to purchasing your Ethereum. Now you have to put down the collateral, right, the $3,300, but if Ethereum doesn't go that low, you kept the $60 and you kept your collateral. That's a pretty good premium. I mean, if you come from options trading in CeFi, like in TradFi, then you know these premiums are pretty decent. Pretty decent for sure. Like, 2% week over week. If you could keep that percentage, that's awesome. Okay, so anyways, this is why I like Lyra. Hopefully you guys sort of get my excitement about Lyra. No, they're not a sponsor. I just, like, Lyra is exactly what I wanted from Open, and I got it. So I can see why they open on December 14th and they're already like number 3. I imagine they'll be number 2 or number 1 in a month or two, because 125 doing a 2x is not going to be too far. Now it's not going to do like 2x for the Lyra token, because I don't know, maybe Lyra accumulates platform fees or something. I don't really know. I'm just here to talk about the option trading itself, not actually the proprietary token. But like, this TVL is going to come from people putting money into it as collateral and investing. It's not going to come from the Lyra token price appreciation. Okay, cool. Let's just talk about DopeX really quickly, because DopeX is solving what I perceived as one of the biggest issues, which is like low levels of liquidity in these protocols, or just, like, you need enough money to have tighter bids and asks. So what DopeX has, it's pretty cool, is they allow you to effectively participate in selling covered calls by providing liquidity. So you're providing liquidity at certain strike prices, and you're getting APR on that for as long as the strike price is above that. So what we're going to look at it. Like, if you didn't understand a thing I just said, don't worry, because we're about to get right into it. So here is the Ethereum Options Vault. Now look at that APY, 25%. Some of the best APY you're going to get on Ethereum anywhere. Though I will say, Ribbon Finance does have pretty good APY, like 20 to 18%, and it's pretty consistent. And I don't think there's risk of you losing your or selling your covered call collateralized Ethereum. So let's just click manage. You can also buy options, which is cool, right? If you want to buy some options, what's the premium? Yeah, it looks like the premium is like $228 for the right to purchase Ethereum at $4,000 at some future date, which I'm sure, like, if you looked into this enough, you could find. What I'm more interested in with this is like the staking, because you can see all the strike prices, right? And you can see what the APR is. So if you were super bearish on Ethereum, or like, you knew the future, you knew Ethereum wasn't going to pop back over 4,000 for a long time, you could stake your Ethereum here and get 203% APR, just raking that in. And I believe if the price of Ethereum goes above $4,000, well, then you you sell your assets automatically or algorithmically, but you keep all of your APR, and you sell at $4,000. So, you know, the APR, even at $6,000, is not bad for, you know, an asset like Ethereum. But $5,000, I would be cool with this, right? This is sort of a comfortable APR. I wouldn't mind. This is Arbitrum too, so it's an L2. Gas fees are negligible. You know, you have Ethereum here. You want to get 33% yield. This is probably one of the best Ethereum yields that you'll get. Well, hopefully, I don't know what the yields. I don't know if the yields will be consistent here, but this is really good. Okay, so that's basically it, guys. That's all I want to talk about. So you could buy options here as well. You can buy calls, but selling calls, getting that yield, getting that passive, like I think that's where most of DeFi's mentality is. So we sort of need more degen TradFi traders to come in to fill the other side of the order book, right? To start buying these calls, or buying these puts, or doing these spreads, so that, you know, the sort of safe little humble farmers like Taiki, right, can come in here and just put down some Ethereum, get a nice 33% yield, while the degens trade options back and forth. And I do think all of these are European options, which means that they you can't trade them or trade on the volatility of the price and premium. You have to sort of wait until expiration. Okay, guys, so that's basically everything. Again, if there's a lot of interest in Lira, or maybe even if there's not, just if I want to have fun and do a video, I might just do a video on bridging funds to Optimism, and participating in one of these calls. Because, you know, fees are going to matter, right? If the fees outweigh the premium, then this becomes a much less enticing protocol. But if the fees are really negligible, like I imagine they will be on an EVM, then this is a really cool platform, and I hope it stays up. I hope it does well. I hope these premiums stay decent, because this could be really cool. Also, Dopex on Arbitrum, it's great APRs. But do read the white papers, please, before investing, because, you know, I'm researching like 15 protocols at any given moment. So the odds of me missing something, super high. And I'm not doing deep dives right now. Right now, I'm just sort of exposing you guys to your options. Okay. Well, hey, if you want this video before anyone else, you can join the Patreon. If you want to ask me questions about options trading or about TradFi or like about anything really, and have me respond within 24 hours consistently all the time, then join the Patreon. I am at your service. Otherwise, thank you guys so much for watching. I should have something interesting in the next couple days, but have a wonderful rest of your